Yes, my people, welcome back to the channel. Hope you guys are all doing good. Now, in today's video, I'm going to be going over a full trade breakdown on how I managed to catch this trade, which netted me $7,000 on my live funded account. As you guys can see, proof of everything is here in the Discord server. If you guys want to go and do further more research on me, feel free to join the free Discord server. And in general, if you guys are interested in being in a community full of like-minded people, people that are on the same journey as you, people on the same mission, yeah, make sure you guys go ahead and join that Discord server, link in the description. And you guys can see out of this $18,000, I managed to go ahead and request a $9,123 payout. Now, for all of the haters out there, you guys can see payout has been requested on the actual Top Step dashboard. If I go ahead and refresh this, it will all still be there. All I'm simply waiting on is this payout to land. $9,123 payout, and then obviously my profit split. And again, I got another payout, and for some reason, it still hasn't been sent, but I know it's Top Step. They're going to pay me out, inshallah. Nevertheless, let's get right into this trade breakdown. So as always, we start off on our higher time frame and figure out our higher time frame bias. Now, first things first, on EURUSD, I have noticed one thing that stood out to me the most. As you guys can see over here, we have a bearish, unmitigated order block. Now, just below this order block, what was there? There was liquidity. Now, these points of interest are the best points of interest to try and catch reversals from, or in general, it's just a good draw on liquidity for the market to go ahead and take. We know this because once the market takes liquidity, mitigates a point of interest, it makes most logical sense for it to reverse. Two birds with one stone. And this is always early sellers trying to enter the market. So I've seen this and I've identified this as my draw on liquidity going into the week. If we also look over here, you guys can see the market ended up sweeping out this low, giving off this inducement and mitigating this 4-hour bullish order. Again, early buyers were trying to buy off of this level. The market ended up spiking up, inviting them buyers in. This level over here was a smart money trap. And we can clearly see that through when the market gave off this fake reaction, failed to break higher, and rallied lower and gave off this inducement. Now, you guys can see over here, Friday, 22nd of August, this low ended up getting taken out on EURUSD. However, if we go over to GBPUSD, Friday 22nd of August, this previous daily low, this previous weekly low, GBPUSD failed to take out this low. Whereas in EURUSD, we ended up taking it out. This is what we call an SMT divergence. Now, SMT divergence is a very good confidence that you can use in order to understand that the market doesn't have any reason to go lower or higher. The SMT is telling me that one pair has taken this point of liquidity, the other pair does not have to do it. It's really good when it comes to predicting reversals, because for all I know, EURUSD can go ahead and take out this low and then go in reverse. So the SMT divergence here is telling me that the market doesn't have to go any lower. Nevertheless, you guys can see over here, this SMT divergence followed through with a market structure shift, as well as disrespecting all of these bearish fair value gaps over here. This is indicating to me that clear as day, buyers are in control of the market. And once again, this high over here is a very easy target for the market to go ahead and take. So now I've got my drawn liquidity, I've got an SMT divergence, my points of interest have been mitigated. The market is screaming to me like, yo, the market's gonna go fly. Now I have to make sure that every single time frame has aligned. So slowly zooming in and reading the finer details of price, you guys can see how the market is respecting this bullish fair value gap over here. Now we ended up tapping into this bearish order block over here. However, I knew straight off the bat that this was a smart money trap, an SMT. How? Very simple. First of all, my drawn liquidity is higher, and as soon as I saw that price made these equal highs, I knew clear as day that on the lower time frame, this was a drawn liquidity. This fake sell-off over here was simply an intentional move to retrace, rebalance this range over here, mitigate this level of imbalance, to then continue pushing towards the upside. So I understood that these equal highs over here were gonna go ahead and get taken out by the market. So all I simply done was I kept on scaling down in order to figure out, cool, where do I enter now? So once again, you guys can see time frame alignment with this trade. 4-hour, clear as day bullish, disrespecting bearish PD arrays and respecting bullish points of interest. 1-hour time frame, clear as day bullish. You guys can see how we're respecting this 1-hour imbalance with these equal highs above. And that's what I say to my students all the time. Wait for the higher time frame and the lower time frame to align. Make sure it literally looks very similar. The same way that on the 4-hour time frame, I'm targeting this high over here. On the lower time frame, you should be targeting a high as well, if that makes sense. So cool, slowly scaling down to the 15-minute time frame. I noticed that straight away on market open. And by the way, the funny thing about this trade was I only traded this day to do my minimum trading days to secure my payout. I had no intention on going ahead and making $7,000. I only hopped on the market with the intention that I'm going to make $200 and then keep a step in, secure my payout. But instead, I ended up actually analyzing it and realizing that there was a setup. So I ended up taking it. Nevertheless, what can you guys see over here? The 15-minute time frame, we had a bullish breaker structure over here. Now I simply went ahead and I marked out this order block over here, this level of demand, whatever you guys want to go ahead and call it. And once again, notice how on the lower time frame, we're constantly giving off these inducements, sweeping out these lows, mitigating these bullish points of interest, and then causing a reaction towards the upside. All of these lows over here are protected lows. You guys will notice a cycle. There's a build up of liquidity, an inducement, a sweep of liquidity, and then a reaction up high. And I want you guys to understand this. Whenever the market is going in a trend, overall, it will look something like this. However, on the lower time frame, what will really happen is the market will do something like this. It will give off an inducement, and then it will continue going off. This is how you know that buyers or sellers are in control of the market. So cool, all I simply done was I waited for the market to tap into this point of interest over here. Now I notice how we ended up tapping into this bearish order block. However, once again, I've identified this as a smart money trap. Why? First of all, there's equal highs above. Second of all, the fact that the market failed to tap into this high and lead to a lower low showed to me that this here was the fake out. Let me show you guys what I mean. If the market was bearish, it would be making lower lows and lower highs. However, the fact that we failed to establish a lower low and instead we ended up respecting the low showed to me that this was a fake out. It was just simply an invitation to invite in sellers, build up more liquidity. And you guys see exactly that. What has the market been doing? It has been generating a little trend line. Trendline traders believe that 3 touches on a trend line validates a trend line. So what do you think they're going to try to do when the market taps it the 4th time? They're going to try to sell. And what is the market most likely going to do? Give a fake reaction. So at this point, I've ended up scaling down to the lower time frame. And what can I see? First things first, you guys can see the Asia low at the current time never got taken on EURUSD. However, if you go over to DXY, you guys can see Monday 1st of September, midnight high ended up getting taken out. SMT divergence. Now what does the SMT divergence tell me? It tells me that price is done manipulating. It tells me that the market has no reason to go ahead and take out this low. This low over here is protected. EURUSD does not have to go take out the Asia low. It can now safely reverse. However, once the SMT is in place, it would be silly to just buy blindly off of the SMT, because I've seen multiple cases where the market places in the SMT, gives a fake reaction, and then goes ahead and runs low. Just like when there's a liquidity sweep in the market, you have to wait for a break of structure or change of character, market structure shift, or whatever you want to call it. So what have I done? I've simply waited for the market to break past this high over here. I've identified my market structure shift. However, the fact that the market failed to break past this high, I didn't just yet want to take an entry. Why? Because this could go ahead and easily become a bad market condition, aka slow, choppy, ranging Asia. I need you guys to understand, even though this trade was during Asia session, it's still valid. A lot of people think that you can only trade London and New York, and Asia you have to avoid. Don't get twisted. I really don't advise trading Asia. I only took this trade once again to do my minimum trading days, and then I realized my take profit has so much more potential to go ahead and land. Let me extend my take profit. But there's one or two ways that this could go. Either Asia would generally chop around because it would fail to break the high, fail to break the low, fail to break the high, fail to break the low, aka bad market conditions, or it would actually go ahead and give off this expansion, take out all of its liquidity, and go ahead and hit my take profit. The only way I was able to tell which one it would do was I simply waited to see, cool, are we going to go break above this high? And that's exactly what I've done. As soon as the market ended up retracing, rebalancing this range over here, sniping into equilibrium, and then giving off this inversion fair value gap, I knew that the market was going to go ahead and take out the highs. So I ended up taking a manual entry, had my stop loss on these lows over here, and in terms of my take profit, I ended up swinging it. I'm going to show you guys where I targeted in a second. Once again, just touching up on the point of Asia, usually, yes, I don't trade Asia session. Why? Because usually it's choppy. However, there are days where Asia will go ahead and expand. Now, in terms of my take profit, all I've done was I simply went to the 45-minute time frame and I ended up seeing how there was this nice bearish order block over here, and what was just below it, this liquidity. Now, I need you guys to understand the sort of intuition I had behind this trade. First of all, it's such a controversial trade in terms of the time I took it. I took it on a Monday, Asia, and it was USD bank holiday. So many people would usually sit out these days, and I completely understand why they would. However, I'm still able to analyze this price action. And let me show you guys what I mean. The reason why I didn't go ahead and target this high all the way over here, or I didn't go target that 4-hour bearish order block where I was expecting a high time from reversal, is very simple. You guys got to understand that, first of all, it's a Monday, no news, bank holiday, whatever you want to call it, and there's still plenty of days left in the week for the weekly expansion to happen, for the market to go ahead and take out the drawn liquidity. So I understood that on a Monday, it would make sense for the market to sweep this liquidity, tap this bearish point of interest, and just start chopping around, right? It's a USD bank holiday. I'm not expecting the biggest expansion in the world. Chop around, manipulate lower, whatever it may be, and then go ahead and distribute higher throughout the rest of the week, especially the fact that there was NFP. I didn't expect the weekly expansion to happen going into the first day of the week. However, I simply understood that the market could easily, at bare minimum, tap this high, start selling off to create some liquidity for the weekly expansion to go ahead and take. And if I go over here and show you guys the mental markups I sent to all of my students inside of Project 30, you guys see over here on the chart session, going into the week, I expected the market to go ahead and take out these equal highs, manipulate lower, tap into this bullish fair value gap, and then for the weekly expansion to happen and go ahead and take out this high over here. This was literally one day before I took this trade. And what can you guys see over here? Exactly that happened. We ended up going up higher, which is the move that I caught. The market ended up selling, tapping this point of interest, and then rallying towards the upside. I predicted a whole weekly candle in front of all of my students, and this is the stuff that I do all the time. I send so many outlooks into Project 30, and alhamdulillah, majority of them land. Nevertheless, I'm going to explain that one more time just so you guys sort of understand what I mean. The reason why I didn't go ahead and target my drawn liquidity is because I understood it was a Monday, no news at the start of the week. It makes sense for the market to open, start accumulating around the opening, manipulate lower, tap this bullish fair value gap that's unmitigated, and then go and fly towards the drawn liquidity. And I want you guys to understand this so many times, especially with Forex, it does this a lot. Let's say there's some equal highs in the market, and the market ends up selling, and now it's like, okay, I'm going to look towards buys to target these equal highs. We get a market shot shift, the market retraces, taps you in. Whenever you go ahead and try it, of course the market can very easily just rail through these equal highs and hit or take profit. However, a lot of the time what the market tends to do is very simple. Generate some more liquidity, give some fake reactions to invite in some more sellers to create more liquidity at the highs, and then go ahead and take it out. I understood that all I was simply doing was catching this move up here, getting out, and then later on throughout the week I could go ahead and catch the real expansion. Now if we play this trade out, you guys can see eventually, alhamdulillah, the market ended up rallying towards my take profit, and alhamdulillah I managed to manually cash out and top tick my exit for the day. Now if I get out of replay mode and show you guys what happened that week, you guys see exactly what I predicted to happen. Monday failed to take out the drawn liquidity because it was a Monday, no news, USD bank holiday. It was expected to just be a build up of liquidity, and that's exactly what the market done. It generated this liquidity over here. The rest of the week ended up selling off, manipulating lower, sweeping out these equal lows down here, mitigating that 4-hour imbalance which I showed you guys. Like I said to you guys in the last video, news will either manipulate or distribute. And this day or this week there was NFP. a big red folder news, which usually does distribution. And that's exactly what happened. NFP ended up dropping and the drawn liquidity ended up getting taken out. That was a bit of a complicated trade because I was essentially sort of going counter trend against my bias in the short term to catch a move up higher where we start inviting in sellers and then I get out, if that makes sense. But I was able to do that because I understood not to get greedy. So many people, if they caught this trade like how I caught it, they would end up going ahead and targeting that drawn liquidity. And the market would end up reversing on them. And they'd think, okay, why did it do this? It's very simple. You need to understand that at the start of the week, the market will usually accumulate, aka generate liquidity. And remember, accumulation or generating liquidity doesn't literally look like a range. Sometimes generating liquidity can simply be creating some equal highs like it done over here. I understood that when I was in this trade, of course, the market could still go ahead and take out my drawn liquidity going into the week. However, there's more of a chance that it goes ahead and reverses, generates equal highs to come back and tag later on. Nevertheless, that is a full trade breakdown on how I managed to catch this trade over here, which netted me $7,000. Now, this video is slightly more jam-packed with knowledge compared to my old videos, and that's simply because I realized that I should start dropping a bit more value, a bit more of my strategy on YouTube for free for you guys out there that can't afford the course. Because I'm a nice guy and I want to help you guys out. Yeah. Nevertheless, out of this 18k, I could go ahead and request 50% at a time. So I ended up requesting my 9k. Again, for the haters out there, dashboard's all there, reset it, it's still going to be there. Yeah. Nevertheless, I hope you guys enjoyed this video. I hope you guys learned something new. For those of you guys that have got this far in the video, comment the word wooden panels. Yeah, I'm just curious to see how many of you guys got this far. Also, it helps boost the video out on the algorithm, helps me grow as a content creator, and I'd much appreciate that. Nevertheless, it's been your boy 1FX. Take care, my people.